Welcome to Power Charting. I am your host, Bruce Frazier. Is the correction over for stocks? That's our discussion for today. Since July, we have gone through a series of lower lows and lower highs into the new quarter. We are now in the fourth quarter, as we have been talking about. Can the case be made for this correction being over and for the emergence of a new rally phase? An exciting possibility. Also, Wyckoff Stock Selection with stockcharts.com. So let's get started. We have a lot to do. First, let's look at the S&P 500 swing trading point and figure chart study. Showed this to you last week. We actually plotted this on September 21st. You can see it's a beautiful distribution style structure across that goes all the way to July and then into August and September. Then thereafter, it starts to go into a period of weakness and turns down with a count 4120 to 4,000. So what has happened since? Well, we had off of that distributional structure with a hinge, and let's draw the hinge in there. We had a very dramatic breakdown, 4440 down to 4240, all in one essential move. Thereafter, a pause, possible redistribution, but again, same count, 4120 to 4,000. Now, what has happened since this is as of October 26th? We looked at this chart last week. Let's see what has happened to date. We had the Fed come out with their rate decision, no change yesterday. The market liked it and is currently rallying. Look at the rally phase that we're in. This is as of mid-morning on Thursday. You can see here a rather abrupt, sharp rally upward. Now, can we say that we are in a potential accumulation structure? It's possible. So let's have a look. Let's have a little further discussion about that. But we do not have yet the conditions where we can say we have a swing trading count as we had with the distribution that formed that took us to 4120. We went exactly to the minimum count objective, by the way, and we did not so far go down to the lower count objective, which I consider to be bullish. When you go down into the objective range, and in this case, we just met the minimum objective at 4120, that is a good sign of bullishness because the market doesn't want to show weakness down to or through the lower objective area. Let's talk about accumulation here for a minute, only in the regard that we want to see accumulation in different time frames. Remember, this is a fractal idea. You can see this intraday, daily, weekly, etc. Well, looking at, for instance, the chart on the right, you can see here that we have a selling climax, automatic rally, and then a range-bound condition where we go through a period of sideways trading, which generally accompanies a large degree of increasing pessimism amongst the trader class. And so if we were to look at this, say, in a short-term basis, even daily bars or intraday bars, do we yet have, and this is a question I ask, we'll have a further discussion about that in a minute, the conditions yet for a sustainable rally advance? And that is really our big question. So you recall that we talk about this often, seasonality, the seasonality chart that we constructed at the beginning of 2023 has been really a great roadmap, remarkable roadmap for us to get us on the right side of the market and help us to avoid the wrong side. And you can see since July, right in here, that this period right here, that this is mid-July. This is right where the peak came in, and it showed us having a range-bound condition into October, November. And the yellow shaded area represents the change from trending to trading range or reaccumulation structure. Very important idea in Wyckoff terms. And also keep in mind that September, October in this seasonality, this is pre-election year seasonality, is the worst 2 months of the year really are September and October of the year. We're now out of October, which we see that there is a more positive seasonal adjustment thereafter. Well, let's look at and bringing up to date the S&P 500 as our proxy for the market. And you can see here how well the market has followed the stride of the seasonality into July, and then a correction, more of a downward tilt to the correction in the index than what was demonstrated in the seasonality itself. But do notice this is important right here. This is like a spring low. This is a lower low here in late October, and that lower low could represent the spring that starts the conditions for a markup. Well, also keep in mind that this all or some part of it could represent an accumulation style swing trading structure, thinking about the accumulation that we just talked about as a model. So we get a spring low in late October, and then we get a test of that low sometime in November. And again, we'll put this chart up. Well, this is exactly what we got. We got a lower low in late October, not so much a spring, but this is just a steady downtrend. And this downtrend, then we now have a robust reversal off of that level, and we could very well go up. It wouldn't surprise me if we don't go up to these early October levels and find resistance there and come down for a higher low test, which would totally fit with our seasonality model. And that would also give us the conditions for some kind of a swing trading accumulation structure that could be potentially counted. Let's look again. This is the S&P 500 with a trend study off of the October lows of 22. A really good rally, upward stride of the advance. Look at the throw over and overbought condition here as we went into July. Classic overbought condition with extreme optimism in the marketplace, lots of bullishness, and then downward it goes. Now, this chart is as of September 21st. I think I showed you this at that time. And then downward towards the oversold condition of the bottom of the upward channel. Keep in mind, the channel is still intact. And so downward we go. Into the end of the quarter, we would expect weakness because the third quarter of the year appears to be a weak quarter, especially with the confirmation of seasonality. So let's update this chart, and we see here that it did in fact go down. This is the chart I showed you last week. Went down and touched what we call the demand line. That's this solid line right here. Touched it here, and then attempted to rally and then broke down. Well, we said at the time that we needed for this to rally back up, get into the channel to preserve the uptrend of the channel, but also, I'm not sure I pointed out at the time, but look at all of this resistance that we had from mid-year 22 into mid-year 23. Formidable resistance, and then when it broke that resistance, it went up sharply to the top of the channel. But look how this resistance becomes new support, goes into that area. That's the 4120 zone of our point and figure chart. Well, what has happened next? So keep in mind, old resistance, new support, formidable support now. Well, look what we have. We've had a rally. This is up through this morning, November 2nd on Thursday, and it's rallied right up to the underside of the demand line. So can it get through there? Also, we're looking at the 200-day moving average. That is a very important trend line and represents a form of important support. I call it a trend line. I think of it that way because it's an uptrend or a downtrend, but it's a moving average. And you can see here that the 200-day is in an upward stride. It got below it, but that represents good support of around the 200. It's jumped back above it. Well, does it need to spend time hovering around the 200 for a period of time under the 200-day, under the demand line, building a cause? Now, I think what maybe could happen is that we go up here to this resistance zone, we get above it and above the structure of the demand line, and then come back down for that mid-November test. And then from there, we're in a position to have a cause built for a more important advance. And so that is a possibility. We will watch closely for that. So wanted to bring you up to date because we have some interesting things going on. And then here, just because I get a lot of questions about the Russell 2000, I wanted to just bring you up to date with this point and figure chart, which is a swing trading chart in a much bigger structure. The Russell has been a major laggard. Small cap stocks have not gotten love in this rally phase since last year. And you can see that it's come right back down. This is April right here. Here's March, and just a big trading range. And since the time of this count, which goes to a low of 164, that's the extreme count, this is what has happened. And note, we went to 164, and then we went to 162, one box below the extreme count. This also in contrast to the S&P 500, which only could get to its minimum count objective. This went through its maximum count objective and then reversed up. So this could all be a spring of this whole support structure at 168. Maybe not. Wyckoffs, we tend to go where the strength is, which is what I'm going to talk about in a minute as we talk about stock selection. So here, just keep in mind for you people that I've lots of requests about the Russell 2000. I wanted to update this for you, but this would not be my go-to place. I hope the Russell can get a rally going because that's a sign of a broadening out of the market. But as of this moment, it's bouncing, it's rallying, but this would not be my favorite place to go. So this is an overbought, oversold screen that I do. I look at this just about every day. And what I look for, and I've talked about this in the past, is that I look for overbought, which is up here, and oversold. Then the other thing I look for is divergent behavior. This is a divergence right here. This is a lower high on the NASDAQ advanced decline 10-day moving average oscillator. So you can see extreme overbought, and then at the peak of the index itself, it makes a lower high, which shows that there's deterioration among the advancers and decliners on a 10-day moving average basis. Then I look for directionality. So you can see the direction is down. That would cause me to look for the index itself to also be in a downward stride. So here you can see oversold, upward direction, upward stride. Well, now we talked about this in other capacities in the last few weeks, but we have an oversold condition here, and something that I think is so interesting is we only marginally took out this oversold level that we made in August and also at late September, and then started to turn up. Look at the higher low here. Now, this isn't technically a divergence, but it is a turn up and an upward stride. So that puts me in gear for rising prices. And so on a swing trading basis, I am looking for trading opportunities in an upward direction, where here we see that we have downward stride throughout from July onward. And so oversold, turning up, northward bound, this is a good thing. Now, also, we have the down volume. The red line here is downward striding, and the up volume is starting to upward stride. When you net these two volume data numbers against each other, look, we are going in a northward direction. We have a higher low here, oversold, higher low, heading upward. This is all positive for a swing trading advance in the indexes. Now let's look at the New York Stock Exchange, which I think is even more interesting than the NASDAQ composite. And the New York, where a lot of these important industrial and blue chip type stocks reside that are not part of the Magnificent Seven, are important. We want to have a broadening out of the market as it works its way into the continuation of an uptrend that started last October. And so broadening out is a very good thing as the market goes up. So note, if you look very closely here, you can see that this is the oversold low in the 10-day advanced decline oscillator. Look, this oversold comes a few days prior to the low in the New York NYA index. So the NYA New York Composite, and that is a very modest divergence. But also, if you look closely, this is a higher low than this one. So we have a big divergence taking place at the lows, oversold, positive divergence. This low and is an important low. This is a lower low. This is an oversold condition and a higher low. This is very, very subtle but bullish. And so we now have a larger accumulation type event, which makes me believe, now this is a subtle point because I'm thinking about point, figure, and accumulation, that this whole area here, I'm going to draw a box around it, could all represent accumulation structure. It's the early part of the accumulation structure. This could be a selling climax. This could be a secondary test. Here's a rally. This was an automatic rally, and we're range bound and building a cause for a more important advance. So keep that in mind. Now let's go down and look at volume. The blue line again is the up volume 10-day moving average basis. Here's the low. Let me clean this up so it's a little easier to see what we're looking at. This is an important low right here, and this is this low. Here's a lower low in the New York Composite, a higher low in the up volume, meaning that we're starting to get positive divergence in stocks that are uptrending or trading in an upward bias, and that is showing up in the volume data. Very subtle but important. So now we see here that this is the low right here, or this is the high for down volume, and here is the high on the prior low, and this also is diverging. You have to flip your thinking over, but that lower high in the down volume is a positive divergence. Fewer stocks are going down with a lower and lower index value, and so that's a non-confirmation of the volume of lower prices. So that's also bullish. Now let's turn our attention here to the net number, and you can really see it in the net number of advancing volume to declining. This low is lower than this low. This is a positive divergence against lower prices in the index. This is an upward stride, ever so subtle, and it's now in a northward direction. And so we have both advanced decline and up to down volume confirming an oversold condition with divergence and an upward direction. We want to not try to fight the market with the for those that like to short. We don't want to fight the market because it's showing signs of not wanting to go down anymore, and we want to think in terms of swing trading opportunities to the upside. Might be a little early yet in that swing trading structure, but now look here. Again, another subtle point. This is actually new highs to new lows. And note the oversold condition in the new high to new low index. And this makes a low and starts to stride upwards while the index, the NYA index, is going lower. So very subtle but important positive divergence in the new high, new low index. So these are all things that are conspiring to put in the conditions for a more important rally phase. Now, keep in mind with the seasonality that we have the potential for a rally that could go into the end of the year, sometime starting in November and into the new year. And as we get further along here towards the end of the year, amazingly, I can't believe we're in November now, is that we're going to then do the seasonality chart for 2024, an election year, and we will look at how the market would trade into the end of this year and in the first quarter of next year. So stay tuned for that. Okay, so now lastly, let me just talk briefly about in the left here is the NASDAQ stocks, NASDAQ composite stocks that are above their 50-day moving average. And then on the right is the New York Stock Exchange stocks above their 50-day moving average. This indicator became exceptionally sold out or oversold. You can see here that we got down as low as 15% of stocks being above their 50-day moving average. That's a very low reading. That is deeply oversold. And this indicator, you can see, flattened out. This low at the beginning of October was met again at the end of October and then started to turn up. Well, is this not a positive divergence? Green arrows indicate that. You can see lower low in the NASDAQ composite and equal lows in the stocks above their 50. That means that the stocks that are above their 50 are holding, and stocks are beginning to turn up and get above their 50-day moving average, which is an early indication of a new uptrending advance. So this is a very good internal characteristic. Now let's go over and look at the New York. The New York does not have a divergence, but very close. You can see, let's zoom in. And you see here that it went down to a slightly lower low at 15, turned up while this indicator was going down. We call this an inharmonious action, but which is bullish, by the way. And we now have a early stage upward striding indicator, upward striding index, the New York comp, and we have, as you can see here, attributes of divergent characteristics, which may continue to build if we have to spend some time building cause. Now let's talk a minute about cause building, because we can see here very distinct upward positive divergence in the stocks above the 50 back here, June, July of 22. This was a very, very good swing trading advance. Well, look, this is a local fractal accumulation structure within a larger structure, and was countable on a point and figure basis and produced counts that worked very nicely in an upward stride, which created some great swing trading opportunities. Here you can see upward striding stocks above their 50-day. This went down, sprung the low, and built a cause. This is another swing trading cause that's been built on a local basis and resulted in an advance. And this advance was even more sustainable than the prior one. And so all of these have little accumulation structures when they, and this is a bigger accumulation structure here, possibly encompassing all this. And then keep in mind, all of this could be accumulation. So now we have the potential here for nascent and early cause building taking place in the New York Composite. Now, what does it look like now? So let's update this to today, Thursday, and you can see that this is now distinctly in a northward direction after a non-confirmation of the lows, and very attractive. And then here you can see that this also is in a very, very good, maybe even a little more advanced than the NASDAQ composite is the New York Stock Exchange upward stride here. And so it's also in an upward direction. So we want to clear the decks, look for leadership, swing trading opportunities in leadership stocks. We don't want the laggards, we want the leaders. And so how do we find the leaders that are making up the stocks that are above their 50-day moving average in both of these indexes? Okay, so with that, let me pause for a minute because I'm going to pull up a different screen and we're going to look for leadership. I am back. And it is so great to, oh, hang on here just a second. Okay, I'm back, and we want to talk about the, we want to talk about how to find leadership in stockcharts.com. Stockcharts.com is such a cool tool, and I'm a huge fan. I'm an unabashed fan of stock charts. I'm going to show you these tools which are available to you whether you have a subscription or not. You have enhanced features if you have a subscription, but fool around with it. Use it for free, use it as a trial. Eventually you'll be sold. You'll want to use stockcharts.com for your stock selection process. So when I'm looking for leadership in stocks, what I do is I go to charts and tools, which is right here. And then I go over to the scooter report, which is on the right side under summary pages. And I bring up the scooter report, and you can see here that we have, and scooters, go read about them in chart school. It's an incredibly useful tool. I use it every day. Now, scooters help us to find leadership. And for those that are looking for stocks to short or sell, you can also find stocks that are emerging into a laggard relationship. But me, I'm always looking for the upside. I'm looking for leadership. And so we go to the scooter report, one of a number of different ways we can get into the data that we want to see. But you see here scooter reports, and up at the top, we have a tab. And what I do is I start by looking at industry groups. And what I want to see is I want to see all the Dow Jones industry groups by their scooter rank. And keep in mind that the breadth of the market is very narrow, even now as it emerges up. Remember the 50 stocks above their 50-day. This is also true for the industry groups. Very low number of groups are in confirmed uptrends in my world. And we've talked about that. I'll show you in a minute some of that. But here you can see that here's the scooter report Automatically, the report you get is ranked by Scooter. And here are the top stocks or the top industry groups using Dow Jones. And these are great groups, by the way. And so you can see full line insurance, broad line. We've been talking about insurance stocks for quite a while now, and they really have been one of the great leadership groups that has worked very, very well. Then we have oil equipment, U.S. oil exploration, semiconductor indexes are right near the top. And down we go, there's 105 of them, and you can see. Now, let me make a point here because we're running out of time, is right now, only the scooters that are above about 80 are in confirmed uptrends from my perspective, and I'll show you what that means here. So here's building materials. Note that the building materials stocks are right on the edge of being in an uptrend. They can't make up their mind, uptrend, downtrend. I always look first at the weekly. This is my default chart. This is the building materials stocks above or below their 39-week moving average. And here is the building materials to the S&P 500 relative strength. Very important indication to me to identify leadership. And so we want always to own stocks and groups that are in uptrends above the rising 39, and the relative strength is above its rising 39. And look, this is more than a year-long advance or uptrend and to participate in. And it's a beautiful, beautiful, persistent uptrend. Okay, just want to show you how that works. But getting back to the scooter reports, go through and study them in the ranking of their relative scooter reading, because this is very important. U.S. medical equipment is only a 17.9. 0 to 100 is the reading. So very poor. Let me just show you what this chart looks like. You can see here that it's in a confirmed downtrend. So medical equipment is in a confirmed downtrend. This is not a playground that we want to play in at this time. Maybe later, but not right now. Okay, getting back to the scooter reports, I want to get right into stock selection here, because look what we can do. We can go here. We looked at industries, but let's go to large cap stocks. So large cap, mid cap, small, large cap stocks, and we have them ranked by scooter. But look at this cool feature. One click allows us to then rank them by industry group. So now we have these industry groups in alphabetical order, ranked by strongest to weakest according to scooter. And so auto parts, you can see the best performing auto part is an 18 scooter, very low. And these are not the stocks that we want to participate in. And so these are all large cap. So let's go here to number 4. This is there's a number of pages of these stocks, but we want to find the industry group here that is industrial, machinery and equipment, and so on. And you can see here, I was just going to showcase here under industrial machinery. Look at this, 89.9. This is the highest ranking industrial machinery stock, Parker Hannifin. Now, I'm just demonstrating this. I'm not making a recommendation, but I want to show you that look what we have. We have a very persistent relative strength uptrend with a new high in Parker Hannifin, and this is industrial machinery. And look at how quickly we were able to get to this. Couple of clicks, and we were looking at this stock. Now, I have my, this is my default chart, is this weekly with these characteristics, because this is my first cut, and then I go down into the daily charts. But here, a beautiful pullback in Parker Hannifin to its rising 39, which should provide really important support in an uptrend, and it did. Look at this week's bar. Note the very large move upward and a new high in the relative strength as this moves up to its prior highs. So this stock has leadership qualities, a scooter of 89.7. So very strong, among the strongest stocks in the market. And so in an industrial name, you can go through and look at, what I do is I start by looking at the large cap stocks first, then I go to the mid cap stocks, and I concentrate all my attention on those two categories. And so if we go back here and look at the scooter report, we can see now, let's look at Illinois Toolwork, has a 53 scooter compared to Parker Hannifin in the same group. And you can see relative strength is turned down, and it's below a 39 on price, and that 39 is flattening out and turning down. Not as attractive. Now, it could have a rally, could take off, but we're happy to wait for it to confirm its uptrend. This is absolutely consistent with the way Richard D. Wyckoff selected stocks. He wanted to own the very best stocks in the market that were showing absolute leadership. This is a wonderful way to do that. I wanted to show you this because it's so powerful. Whether you have a subscription or not, you can drill in and look at these and put them up in your own charting service. I believe that you're going to fall in love with stockcharts.com. That's just me, because I just sit here and do this all day long. And then I'll drill down into, in this case, a daily chart. And I'm looking at Illinois Tool Works on a daily with Bollinger Bands and an RSI. And I'm able to evaluate the stock this way. I can look at any stock. I can drill in and look at different stocks with my favorite chart setups. So with that, I'm going to say so long for now, but go in and do some stock selection, look for leadership, and see if you can't find the very best stocks in the best groups that can show leadership, and then just watch them. See if in fact they do lead the way higher, if this market can ultimately, by the end of November, build a cause for a more important move. And with that, thank you all for being here, and we'll see you next time.